Good morning, traders. It is 8 a.m. Chicago time on Monday, the 31st of October, 2022. Welcome to the last day of October. This is episode number 2347. A quick mic check, please. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's where we are this morning. We're looking at a mixed market this morning after the big rally on Friday. An outstanding performance by the buyers on Friday, lifting the markets in what was a highly unusual range for Friday. For Friday's session, we had 100 points that day, which is outside of what we would consider to be normal. So again, quite an unusual day. Friday, this morning, we are holding mainly sideways. Again, mixed market. Not much to report here. The market is said to be pulling off because of the several reasons, really. Potentially, I personally think it's just gotten deeper into 3,900 than earnings from a fundamental perspective for those who are the higher time frame and the investors, the program managers, are probably seeing these prices in the 3,900 as too expensive given where rates are, in my opinion, and a lot of what I read kind of confirms that. But Russia-Ukraine, Russia decided to drop the grain export agreement it has with Ukraine because it's saying that its ports are unsafe, so it stopped doing that. There's a big push in wheat as a result, but also Russia has been hammering on Kyiv using missiles, just hitting water and power infrastructure. So the market's not liking that going into the winter. Also, China's NBS PMIs came in pretty relatively weak overnight. Last night at 9:30 p.m. Eastern, we got the China NBS manufacturing PMI for October, 49.2 versus 50, contracting. NBS non-manufacturing PMI at 48.7 versus 50.5. So there's a reaction to that. Consumer confidence this morning came out of Japan, was a little bit off, 29.9 versus 30. And then GDP growth this morning out of Europe, the Eurozone came in at 2.1% versus a 2.5 expected. The growth rate Q on Q is 0.2% versus 0.3%, and inflation out of Europe at 10.7%. 10.7%. The prior is 9.9% versus 10.4% expected. So the inflation rate flash year on year for October is pretty hot. Core inflation out of Europe is at 5%, prior is 4.8 versus 4.9% expected. And then this morning we get Chicago PMI at about 942 to subscribers, 945 to the public, expecting 44. And then in the evening we have other numbers, as you can see on the chart in front of you. But in the evening we get the Kexgen manufacturing PMI for October out of China, expecting 48.4, and the RBA interest rate decision at 11:30. A quick review of what's important this week. There's just a ton going on this week. We've got tomorrow we have ISM manufacturing out of the US, but the JOLTS job openings, as it says on the sheet here, really heavy numbers with FOMC on Wednesday. Tomorrow we have JOLTS expecting 10.2. For the Fed to back off, employment has to be softer. And so JOLTS tells us a little bit about that. Then we get ADP on Wednesday at 8:15. We get the Fed rate decision at 2 to 2:30, And then we get unemployment rate out of the Eurozone, the BOE interest rate decision. That's going to be important on Thursday. And then we get unemployment Friday here in the U.S. We get non-farm payrolls and an unemployment rate on Friday at 8:30 Eastern. So there's just a whole heap of heavy stuff coming out. Most of the most important earnings are now behind us from last week. This morning early, we got several. We got Panasonic, Emerson Electric, which beat by 10%, and Avis is due after the close. Goodyear, Aflac, Stryker, NXP Semi, which is relatively significant. These earnings are still ongoing, but they're not going to be as big as what we saw last week. So that's what we have. That's the overview. I want to direct your attention, since it's Monday morning here in Chicago, I want to direct your attention to the rotations, seeing as the rotations are dropping somewhat across the board. Volatility dropping a little bit, so 8.75 in the S&P versus 9.25 is the size of the edge of what we would call a normal rotation. So you have to take that into account as you're sizing for stops. 33 points in the NASDAQ, 4.9 on the Russell, 63 in the Dow, which has been expanding. The Dow has been expanding range as well as rotations, and crude has been going down in terms of volatility and range. 0.33 or 33 ticks in the crude is what's on the edge of what is considered normal. That's that. Looking at the S&P now, switching over to the S&P. The S&P is now in a double distribution profile, really. Double distribution profile with the cutoff at 38.95. The S&P has had 30.75 points of range. The inventory is 98% short, with the point of control at 38.91, higher than where it was. We are trading in the S&P in the upper half of Friday's range. We're holding on. We're holding on to the progress that was made on Friday. So we are pushing against the upper range, with the full session mid and full session VWAP just above us. Let's take a look at that. So let's switch over to what we've got in terms of the markets. So again, I'm going to repeat this. Lower balance, right? Actually, it extends into here. Lower balance, upper balance, break into upper balance, break away from upper balance into upper balance, like the next key area up. And what we've done is we've pushed into this area. So let's project this area forward right here. We've broken through this into this upper area. We actually rejected the 38.90 and closed weak on Wednesday. Then Thursday, we opened and tried again and closed weak yet again. And then Friday, we came in and I did the Trader Bite Friday close to about an hour before the open, and there was a big move right at the 8:30 numbers that changed things quite a bit. But we were expected to open pretty low on Friday, but Friday we opened and it was an open drive essentially. It just had very little in terms of rotations down. This is a really big clue. This is a big piece when the market opens, especially since it was opening on the edge of the range. And you could see here on Thursday, it is really balanced. So it's really important to consider that we are opening in range at value area low. It's very likely at a minimum to test the value range. So to push at least to the other side, which is 38.50. And what we did is we opened and immediately started squeezing to the buy side. It's a day where you don't want to be short. Now, could I have predicted that the range would be 100 points? No. I expected it to push at least to the 38.90 and recheck that once I got out of Thursday's range. That's the most obvious. That's the most obvious test, but it went as far as 39.1650 and closed very strong. So Friday's rally has probably gotten a lot of people kind of moving into the bull side. I would caution on that because on a bigger picture basis, now remember I'm a day trader, so take this with a grain of salt. On a bigger picture basis, we're really pushing against a considerable area of resistance, both from a technical and a fundamental perspective right up here. I'm expecting this thing to start to really rotate down and hold this middle range today. That's the key expectation for today. There's an MC point of control of 38.90, which is the prior high right here. That's this pink line right here. And to me, it's the expectation is we are likely to just shift down and consolidate in this area, suck in more longs and shorts, and then decide on the next move. You know, do we continue higher? The thing is, with Friday's trading, we really would have expected on a statistical basis, we would have expected a higher high in the overnight session. That close on Friday gives us all day Saturday and most of the day Sunday before the futures open, at which point a lot of news can come in, right? So a lot happened over the weekend. And so we're not seeing a continuation. If this close happened during the week, I would have expected a continuation in the overnight session. I'll be confident that we would be testing and remaining on the upper range of Friday. But given that this happened on Friday, we are coming off and we have pushed right up against a key resistance area up above, and there's a magnet down below, and I'm expecting this market to rotate down. So that's key for you to note. Will it do that? Will it follow the expectation? That's not for me to decide. That's for the market to decide. I'm simply here to take advantage of whatever the rotations give me, right? So this is the intraday chart. The orange profiles are overnight. The blue profiles are day session. You could see on Friday really a pretty strong move up. There was a big move right before the open, and then we opened and we just didn't look down. There's a very thin profile down below, an excess down below, and then the market just proceeded to make higher brackets throughout the session, moving volume up the price scale. And since then, you could see that we've just been sitting sideways here at the top of it. So we're trading right up against this 38.91 currently in the lower distribution against the overnight point of control. My expectations are it's likely to be relatively quiet today, although the range overnight has me a little concerned, because if it's coiling that hard in the overnight session, then we may see a break. So this is the action on Friday. We opened right here. You could see there's very poor, a very poor attempt lower, just 2 ticks. And it immediately pushes through to the 38.50, consolidates at the 38.50. This is going to be important from above as we push down. The 38.50 is going to be quite important. The IB was not very meaningful on Friday. We just kind of squeezed through at the time that the IB was closing, which is at 10:30. So to me, any push lower that gets through this area here is likely to target the 38.50. This thing has a very clear downward skew. with a double distribution and a cutoff. And really, you see this low volume node here in the overnight session. That's at 95. This will be the early line in the sand. So the 38.95 right here. The 38.95 is going to give us a clue very early on as to how powerful or how meaningful the buying or the buyers will be during this session. So the expectation, we have a low, we have a higher low. It's trying to turn up. The point of control is right where we are currently. So the overnight point of control is right here. We have full session VWAP at 96. That'll get pulled to 95 very quickly. And so 95 becomes a very close price for me to observe as a trader early on, because it'll give me a very early look at how strong the buyers are and how defensive the sellers are at that price. Once it gets above 95, it may test and fall, but if it gets above 95 and it uses 95 as a base, then we're looking for a gap to settle trade up at 39.11. So from there, the trade would look like a push into 95, consolidate, push through 95, hold the 95, and then we're looking for a 97, 98 into 3900, which is likely to have a lot of icebergs there. It's a major strike, but look for the 38.97 area for a long to 39.11. 39.11 becomes the gap to settle. And once we get the gap to settle, now we're waiting to see how much appetite the buyers still have for Friday's high. Otherwise, it is likely to move into balance and consolidate in or around the 39.05 to 38.95 area for the rest of the session. I know that's a lot to go through there, and hopefully you're able to follow. It's not that complicated, but I am rattling off a lot of prices, and it might be a little bit confusing. But the scenarios this morning, really, let's get back to the intraday chart. Let's expand this. So this morning, what are we looking for? Primary scenario, we're opening on top of the overnight point of control below the VWAP. I'm expecting an open auction in range. There's no value on Friday. Friday could not find any value. I'm expecting an attempt at the 38.95, 96 area. I'm expecting it to fall back to the open and then clean up and start moving towards the 38.50 area. I'm not expecting 38.50 this morning, but I expect it to start moving towards that area. Remember, the 3900 is really a big area for those investing based on earnings and the cost to the underlying issues for those earnings in terms of interest rates. So to me, it's just hard to see that the OTF or the higher time frame is likely to push in and buy this thing through the 3900 handle. It's likely to struggle right here. We've really achieved a big target on Friday. So that's the primary scenarios, to pull back a little bit, if not just to rest. The secondary scenario is an open auction that pushes the 95, consolidates, pushes through the 95, consolidates. Then we're looking for a pullback to squeeze to the 11, which is the gap to settle trade. Look for the 11, consolidate here, and then make a try at the Friday high, which is at 16, 39.16. Okay, and then from there it may just settle down and hang out up here. Either one of these could take place or neither. In either case, I know my prices are 95.96, the 3900, The 39.11 is key for the prior settled, 39.16, and then from there we look to our stock zones, the 39 the 39.27, from there 39.50, and so on and so forth. Below us, the overnight low hit a key area at 38.83 or so. Below there, I'm looking for the 38.50 area way down here. 38, well, the mid of Friday is about 38.67, 38.50. Those are the key areas below. This is a good day to give yourself a little more time to figure out what the tempo of the market is. So try not to jump in and try to catch, a move like we have on Friday. Those kinds of moves where we have an open drive are quite rare. The market does not pull those off very easily, and it has already taken place on Friday, so I expect more two-way action coming into the open, statistically speaking, in my opinion. So that's where we stand. Good luck. Don't forget to hit the like button, and if you have not subscribed to the YouTube channel, please do. It helps expose more traders to the process of looking at the bigger picture and trading based on the auction and a bigger plan. Understanding the price map, understanding the auction, and then placing ourselves in an advantageous position once we see the auction unfold and we get just enough information to act. I can't predict the future, but I can have a plan for when there's enough information for me to take a position. And that's the goal. So please be sure to hit the like button. I'll catch you tomorrow morning for the polling for charity challenge in the morning, where you get to vote for settlement prices on CME's event contracts. I'm going to do a little video on this and how I'm looking to trade this product. Hopefully that'll be useful to you. Good luck, and I'll catch you tomorrow morning. Take care.